Debt-free or invest instead? Would you rather have a paid-off house or a fat investment account? What's the smarter move for veterans in 2026? We'll walk you through the pros and the cons of each. One of the top questions I get from veterans is, should I pay off my VA loan early? Some people love the idea of owning their home free and clear. Others wonder if that money could do more in investments or savings. I'm Jason Wood, the VA Loan Guy, and today we're breaking down the real pros and cons of paying off your VA loan early so you can make the smartest decision for your future. Why veterans consider paying off their loan early? Well, there's some strong reasons people think about paying off their mortgage early. They want to save on interest, they want peace of mind, they want to eliminate debt before retirement, and those are all valid. But there are also emotional drivers. The feeling of security, the pride of ownership, the idea that debt is bad. Before you write that big check, let's talk strategy first though. The pros and cons of paying off early. Pro number one, interest savings. Paying off your loan early reduces the total interest you'll pay over the life of the loan, especially if your rate is above 5%. Pro number two, peace of mind. No more monthly mortgage payment. That's a huge emotional and financial relief, especially on a fixed income. Con number one, opportunity cost. What could that payoff money earn elsewhere? If your rate is 3% and you could earn 6% in the market, you might be losing the upside. Con number two, tax deduction loss. VA loans may qualify for mortgage interest deductions, and paying off the loan early could mean losing that benefit if you itemize. And con number three, liquidity risk. If you use all your cash to pay off the house, what happens in an emergency? It's harder to pull money out of a paid off home than to keep it accessible. Imagine having your house paid off. What would you do with that, say, $2,000 extra per month? Now imagine you invested that $200,000 payoff instead and earned 7% returns. Which one builds more wealth? It all comes down to goals, age, and risk tolerance, obviously, right? So here's a story of a client that I had who was in a college cash crunch. A veteran client paid off their home, then needed tuition money for their daughter. With all their cash tied up in the house, they had to do a cash out refinance. It cost time and money. One veteran chose to invest their extra funds instead of paying off. 5 years later, their portfolio was up 40%, and they still had a low interest rate on their mortgage. So there's no one-size-fits-all answer here. Paying off your VA loan early can feel amazing, but also can reduce your financial flexibility. So look at your age, your income, and your future goals, and your interest rate. Talk to a financial advisor if needed as well. They'll give you some good key insight. Sometimes keeping the loan makes more sense. Sometimes getting rid of it brings real peace. So make the decision that fits your values, not just the numbers. Want to run the numbers yourself? We built a free payoff calculator plus strategy guide, so you can click the link below to get access to it. You can plug in your current balance, interest rate, and monthly cash flow to see what the best option might be for you. So just click that link below or go to valoanguy.us/payoff to download it. And if you're thinking about making a big move, early payoff, refinance, or investment strategy, let's talk. Drop a comment below or schedule a call with me and my team. You've earned this benefit. Let's use it wisely and with intention.